we kind of fell into that like 50 to 100 unit range, um, because we found one, it's at the price point, it's too expensive for most of the small guys, right?
Yep.
And then too small for most of the big guys. And so while there's not no competition, your competition is reduced.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Well, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have another great guest. We got Nick Ameluxen. Nick, how are you doing today?
Good. Thanks for having me on, Todd.
Yeah, absolutely. So Nick, he is a partner in Quantum Capital, assisting in acquisitions and asset management through his 11 years in leadership roles. Nick has found success by solving big problems through relentless hard work and ingenuity. And Quantum is a multifamily acquisition company. We'll get into more detail with that. He's been an active real estate investor in Austin since 2015, oversees Quantum Capital's portfolio in Austin, Texas. While originally from Denver, Nick moved to Austin in 2014. He's got a wife, a couple kids. So Nick, how you doing, man?
Good. Awesome. I'm glad to be on this.
Yeah, absolutely. So why don't you give our listeners a little bit more about your background and what your company is doing today?
Sure. Yeah. So I started actually as a mechanic. I worked for Volkswagen and Audi for about 11 years, and kind of hit the same wall. I feel like everybody does. Just didn't realize there wasn't much of a future there after a certain point. At the same time, I had started investing and kind of took the traditional path, right? I started in stocks. Thought I was going to be, the next Warren Buffett.
That'd be great.
Yeah, right. It seems so easy at the time.
Yeah, it is. Everybody does it.
Yeah. And then, luckily or unluckily, however you want to look at it, I invested in the company I was working for, Volkswagen, in 2015, about a month before Dieselgate hit. So if anybody's familiar with that, anyway, so lost a lot. And then realized that, I had no control over that asset, and I didn't want to do that again. Because it wasn't anything that I did wrong, right? All the research I had done, everything I had looked into, and, I was working at the company and I felt very strongly about it. And then it was somebody corrupt higher up who just tanked the whole thing, right? Wasn't sure what I was going to do at that point. But I had just bought, my first home, and had started listening to a little podcast called Bigger Pockets. And so from there, the idea just started sprouting that, we should do real estate. And it just kind of, spiraled from there. We ended up renting out that house that we had just bought for our family. And instead, house hacked a duplex at the same time, bought a few more single family stuff, bought a turnkey in Memphis, which I'm unable to sell and still have. But
it sounds like you're excited to have it too.
Yeah, no, turnkeys are not great. They're not bad, but they're not great. Anyways, that's a whole nother discussion. But and then I kind of started hitting the same wall in real estate, where I realized this is going to take me forever to get to where I want to go. Right, buying one single family or duplex at the time, and I'm in Austin, so I wasn't doing anything creative on that end. It was just work until you saved up 25% to 20% for a down payment, put it down, buy another one. Right. Got it. And so the snowball was starting, but it was very slow. But at the same time, the first property I had bought appreciated really well. I got lucky. I bought in Austin in 2015, which certainly helps. And I was looking to roll that into something larger, and that's when I kind of got down the path of multifamily and taking it to the next level. And then that really opened my eyes to working with other people. Before that, I was very much I'm going to do it all myself kind of guy. And since kind of embracing that concept, I've been able to scale about a 12 unit with some friends in Atlanta, and then met my partner and we started buying in Austin. We're over 200 units in Austin now. We're closing on another 72. it's been good.
So let's talk about that. That you can do everything yourself, right?
Yeah.
Let's talk about that change from doing everything yourself to then taking partners. Take me through kind of that mindset shift and then the benefits that it's had.
Yeah. I feel like a lot of the mindset, at least on my end, wasn't that, I don't need partners. It was more, everybody says, oh, you got to bring value to a transaction, right? And I'm just this young, mechanic with like 2 single family houses or, in a duplex. I didn't really think I had any value to offer that, right? I think the mindset shift was when I started realizing that, I'm in it in my opinion, one of the best markets in the country, and that the value I could bring was finding deals. And that's, when it started making more sense for me to partner up, because I found an area where I could add value. Prior to that, I liked the idea of partnerships, but it was more of a, where do I find these people? And I also wasn't networking at all. I'm just kind of expecting this to, fall into my lap. So I think, I think going out there and networking and searching for it, and then, having a value, having some sort of value proposition.
So so you started going, so did you purposely then seek partners? Like, did you say, hey, I want to take this to the next level. Like, I got to seek some partners. I got to figure out how I can add value. Or did you just meet some people and say, hey, this could work?
No, it was more the first one. I decided after looking outside of my market, and then going through the whole process where I was, I'd have to build the team on the ground and, do all this work just so I could buy something a little bit more in my personal price range without bringing anybody else in. Right. I was like, I'm just going to stay in Austin. And I knew if I'm going to stay in Austin, where the prices were and where, what I could buy, I would need a partner, right? I need somebody to help qualify for the loan. I need somebody with experience, and more capital. And so I was very intentional in that. I didn't need to run the deal at all. I was just looking to learn. And so, I just reached out, I went to all the, local meetups, specifically one centered on multifamily. I ended up starting my own, because my work schedule was hard to make it to others, and there wasn't one down south where I worked. So, that was good. And then, I made it a practice to reach out to people on bigger pockets, quite often in the beginning. My goal was 3 people a day, just messaging and basically saying, hey, looking for somebody experienced, somebody in the Austin area or near the Austin area, who had done this before, or, had heard them on either the Bigger Pockets podcast or somebody else's podcast, and just seeing if there's some way that I could, create some value for them.
Yeah. Yeah. It's funny. I tell my coaching clients, like, if you're looking for something on Bigger Pockets, if you're looking for investors, if you're looking for partners, whatever, you got to start posting like minimum 3 times a day. That's the magic number I use. 3 times a day. You got to post, you got to get on the forums, that type of stuff. It's a great resource, and it's a good tool. Then and the networking event too. And I like what you said there. You started your own networking because it was hard to just make the meetings at the times that they were at. So you go, hey, I'm going to start my own and I'm going to get it to where it works for me. And likely that worked because it worked for other people too, right? If you were having a problem making the meetings, certainly other people were as well.
Yeah. Yeah. I mean, it grew into something that was, bigger than I ever thought it would get. And it wasn't exactly huge, but, yeah, it was a good thing to have done.
Are you still running that meetup, or did you?
We pivoted to online like most people.
Yeah.
And we have not gone back in person.
Yeah. Yeah. Is the intention to go back to person after this COVID craziness, or are you just going to keep it online?
No, we'll go back to in person. I feel like you lose a lot. I like the virtual. You get a lot of information, but you lose a lot of the the networking aspects of it.
Yeah, for sure. And it seems like you get less attendance, and maybe you have had the opposite, but it seems like you get a lot less attendance.
Yeah, starting out, the attrition rates weren't that high, and now there's like 17 webinars a week, and I think people are
Yeah.
just burnt out on it. So,
Like, which one do I attend? Like, same thing with the virtual conferences. We hosted a virtual conference and it went well. Like, we had a decent amount of people show up and buy tickets and stuff. But I think it was that, uh, which virtual conference should I attend? Like, what's the flavor of the week this week? Because there's so many of them out there, and I keep seeing them pop up like left and right. It's like, man, how many virtual conferences can you actually have in one year? But
yeah.
okay, people want to do them. So, so that's awesome. So now you've transitioned into some of these mid-size or larger multifamily. Um, you what's I guess what was the reasoning for the scale that you went? You kind of talked a little bit about that, but maybe go into more detail. What was the reasoning and how has that worked out for you?
Yeah. A lot of the reasoning was just to get to our goals quicker, right?
Yeah.
I'm not looking to drive around Ferraris or Lamborghinis or anything like that, but
No.
financial security and time freedom are very important to me. Um, and I'd like to have that time to spend with my family, and so that was the whole purpose behind investing, right? Is I was in a career that I candidly very very much loved. It was great, but you can only work so many hours a week, right? And then it takes a toll on your body and all these things, bad things. So this was kind of like my safety hedge. I just ended up enjoying it, my side hustle.
Yeah.
And as I saw the cash flow coming in, I saw and it's in Austin, so it wasn't heavy cash flow, but as I saw the appreciation and the equity growth, I realized that this is a pretty powerful vehicle. Um, and if we went kind of all in, it could help us get there a lot faster. So that was the main impetus behind scaling.
Yeah. Cool. Let's talk about your leadership role. You said you had a leadership role in your W-2 and how that's really helped you be successful here. Talk a little bit about that. Like, what are some really key takes that you can give to our listeners on proper leadership and how they can, you know, learn from you and put that in their business as well.
Sure. I think the biggest thing I took away from being in a leader, in leadership roles, team leads, shop foreman, things like that, um, is really just how you treat the people that work for you, and creating an environment where uh, where people, kind of know what to expect from you. I've worked with a lot of emotional owners, and I didn't want to be that kind of boss because that doesn't create any sense of stability. Um, and so that was one thing I kind of craved moving forward. And also, I like working with people I like, and and that's hard to do in middle management, right? You don't have a lot of control. And so one of the lessons I took forward is, at least in this business, I have that luxury where I can, work with people I like, vendors I like, investors I like, partners I like, where you get along, and it just makes the whole process a lot easier. Um, I don't know how well you can do that on the business level, but um, in different industries. But that's been a game changer for me, at least for stress wise for everybody.
Yeah. 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 So I like that. I mean, creating that environment of stability is a very valuable. Obviously, if you have employees and they don't know what to expect day to day, it's going to be hard for them to want to show up.
Yeah, it's hard for people to give their best when they're constantly afraid, of how you're going to react or what you're going to do, or if they have a job the next day, even though they've done everything that you've asked them to do. I've worked in a lot of places like that, and just didn't want to roll that ball forward.
Yep. Yep. And that goes with, look, that goes with your team in real estate. That goes with any of your partners, investors. I mean, creating that environment of stability and expectations, and it's going to create a lot more success. And if you can kind of let that be a trend through the business, I think everybody's going to be a lot happier. I mean, when you have a business partner and you don't know what's going to happen day to day, maybe you don't know where they're at. Maybe you don't know what they're doing to help grow the business. Who knows what it is? That just creates stress for everybody and not a win situation. So.
Yeah, 100%. And, I think the only other big thing, and you kind of touched on it, was having, clear and actionable goals. I'm a big numbers guy, and I like having KPIs that, are all reflective of efforts, right? I don't hate, I think it's a good ideal when people are like, oh, I got to close, this many units this year or something, or, whatever. I prefer to focus on, deals analyzed, brokers talked to, things offered on, all things that, I have control over. Versus, and I did this when I was a technician as well, and a team lead. It was, focus on the things you have. How many hours are you turning? How long does this job take? Because those are the steps that'll take you to that ideal, right? That lofty goal is have actionable weekly goals.
Well, and if you're focusing too much on, hey, I want to get, 500 units, 200 units, or whatever it is, if you're focusing so much on that, are you really purchasing the right properties? Are you really buying in a market or in a timing or, the property type that you should be buying in? I think that's the biggest question I get with people I see companies right now. I see people I know right now, and they're so goal driven by getting X amount of dollars in real estate or X amount of units. And it's like, I look at some of the properties they're buying and I go, okay, but should you buy that thing? Like, I wouldn't touch it.
Yeah.
Why are you doing it? Well, it's to get to your goal. That's it.
Yeah.
So I like that. We're going to underwrite a certain amount of deals. We're going to talk to a certain amount of brokers. And if we do those things and we get, 200 units, awesome. That's great. But if we did those things and we don't find the right 200 units, we're going to be happy with what we did throughout the year.
Yeah, exactly.
I like that. And I think that just sets you up for a lot better success in the long run. Maybe not short run, right? But in the long run, it's continued success that's going to allow you to sustain and be in a better place. So, what's a mistake that you've made and how have you learned from it?
Yeah, I'll just pick one out of the many. Underestimating payroll, I would say, on acquisitions, especially when you're scaling up into multifamily, or you get into the larger stuff.
Yep.
That was something we learned pretty early on and have adjusted quite well to that. Taxes, that's a big one too. I'm a big harper on taxes now, but really knowing where your county reassesses. Most of
that's huge.
Yeah. Oh yeah. It's significant. Even if you feel like you're properly accounting for it, I'd always caution you to just, triple check those.
Well, and if it's, a broker's trying to give you information, I mean, you can't really trust what somebody else is trying to give you. A, they're trying to sell the property. B, they don't necessarily do their homework. And so they're probably taking the current year and just adding a percent or two, and that's it. That's not necessarily how things work.
Yeah, exactly. I found now, we have good partners now, in the property tax protest game out here in Texas. So we just contact them before any acquisition now and just make sure that we're all looking at the same thing. And I mean, that was I made that sound like a big mistake, but it can be. I think I caution people about that a lot.
Really, it sounds like mainly the mistake is just not enough diligence in your underwriting early on. Not looking at the property taxes, not thinking about some of the expenses, and missing some of those finer details.
Yeah, I think when you're underwriting, it's easy to go one way or the other, right? You can either be ultra conservative or very aggressive, on the other end. I think it's it's finding a good balance between the two. And a lot of that just comes from actually operating, right? Once you're in the trenches, a lot of your assumptions fly out the window and you know better the next time.
Yeah.
So I guess, it's maybe not a mistake. It's just part of the learning process, but always be learning and then adapting.
Is there a specific, like anything specific that somebody could go, hey, I see that. I get that you have to learn as you go, but I don't want to make any of those mistakes. I want to be perfect the first time. Is there anything that people can do that you, looking back, would go, yeah, that would probably help?
Oh yeah. I think the biggest one is just really vet your management companies if you're doing third-party management. We interviewed tons. We had, all of our checklists for conversations and still, wound up with a great company and a really, unfortunate regional situation and on-site management that made the first couple of months really uncomfortable and really rocky, right? And so you can do all your diligence, but I think really vetting the on-site and local team, take it a step further. If you're working with big companies, if you're working with local companies, secret shop the properties that they currently manage.
Yeah.
Really do your homework. And when I say secret shop, I don't mean go on apartments.com and look at the listings and see how they are. I mean, go there and pretend to be a renter and yeah.
Mm-hmm. Yeah. Having those team members on site, man, that's so critical. And you have the wrong team members on site that can just crush your property. And you have the right ones that can make your property an amazing property. So that's so critical, so important to do. And having the right property management company. I mean, that's critical too. And then when we talk about underwriting and property management company, well, the property management company can really help you with your underwriting. Especially if they're managing a lot of properties that are very similar to yours, a lot of the assumptions that you're making, they can go, well, look, I mean, we manage 2,000 units right here and we're spending X in payroll and you're only putting this. Like, you probably should up it. Like that's is what we're going to have to spend. So, a lot of that too, I would lean on some of the experts in the industry, like your property management companies for sure. So, so take us through the maybe a couple key factors for your company's success, maybe 2 or 3, just like key factors, key things that you guys do on a daily basis, daily habits, that help you with your success and have helped you, move forward.
Yeah. Key habits. I think we're just very structured in our routines. Like I said, we have KPIs, weekly calls where we're making sure that we're hitting those, priorities. We do our quarterly reviews to make sure that we have, we're all kind of in line with where we're aiming for. So when we look back in 90 days, we're happy that that's where we spend our time. And I feel like, that sounds maybe simple, but, that's powerful when you're all kind of focused in one direction and know where to go and where to spend your time. Cause there's so many different aspects of this business where you can kind of get lost in the weeds and make, an inch progress in every direction.
Yeah. That's super critical. I can't remember what book it is. I think it's by Darren Hardy and The Compound Effect. And he talks just about that, like just these, you got to keep on that snowball effect, right? You just got to keep on building upon stuff and you'll get the results. And so I like that. The KPIs, the weekly calls, making sure you're structured, making sure you're doing those little things to push the business along. Like you said, you can go and do all these different things and get lost in the weeds and not get really anything done. But if you can focus on the main things, you're going to get results. And you guys are showing that.
Yeah. I think, I can't really add more to what you just said. That's a good point.
So how about personally, do you have any habits that you do, like wake up, or before bed or, anything like that?
Yeah. I love exercising, and usually earlier in the morning, the better. I'm a runner. I feel like that's helped kind of maintain my calm during very stressful times. And that's a habit I attribute a lot to. Same with meditation. I'm not the greatest at it, but even working in like 10 minutes a day, as consistently over time, has been great. If you do it like one day a week, which I'm certainly guilty of, it doesn't really add too much, but even fitting in 5 to 10 minutes.
Yeah. Like it. How do you like to give back?
Yeah. I wish, I shouldn't say I wish. I'm waiting to get to the point where I can really give more and more time back. Right now, it's just more monetary, but we like helping local causes, especially out here in Austin. We have a big increase in the homeless population, so doing what we can to help on that front.
Nice. Yeah, definitely. And that's kind of everywhere, right? There's a lot of increase on that. I drove yesterday by a homeless camp in St. Paul, and it's just pretty sad to see. I mean, you got these people out in tents and it's 20 degrees outside, and
yeah,
wind is blowing, and it's like, man, these people are, and we're getting into the thick of winter here. You guys obviously don't have the same in Austin, but man, even so, it's still harsh conditions for them to be living outside and under a bridge or whatever, wherever they're living. So
yeah,
that's awesome.
It's devastating.
Yeah. So what's your guys' goals moving forward? Where do you see yourself going?
Yeah. We like investing in really competitive, markets. We invest in Austin and LA. I think we're going to continue to expand in those markets as long as we find things that kind of meet our criteria, and start looking at a few others now that we've kind of have our footprint here and our system set up, and find other great markets where we feel like we can get similar returns.
So Austin's a great market, right? The fundamentals are fabulous. People are moving to the area, but it's super competitive. So how do you? I think a lot of people are like, yeah, I hear over and over, and it doesn't matter what market they're in right now. It's almost every market, right? My market's too competitive. I got to go out of state. I got to go somewhere else. Whatever market it is, it's so competitive. They go somewhere else, and they end up going somewhere else. Like they'll come to my backyard, they'll come to Minneapolis. Well, Minneapolis is super competitive too. Like, what are you doing coming here? Like, every market's, super competitive. And if it's not, like, there's probably something wrong with it.
Yeah.
Right.
Yeah.
So what are you doing? Austin is a very, very, very competitive market. So what are you doing, or how are you making these properties like work? How are you getting them? Like, take me through a couple of action steps that people that are like, I don't know where to find a property. How can they actually have some success?
Yeah. It takes a lot of hustle, right? I mean, Austin is definitely the Wild West. Most stuff doesn't even make it, to being listed. It's all through relationships with brokers, right? Is how you're going to see most of the deals. So, I prioritize creating those relationships early on. And that certainly, didn't get me exclusive looks at anything, but at least got me on the list, right? You're in the game. From there, a lot of it is just follow up, do what you say you're going to do. When you get a deal sent to you, I like to have it, underwritten and my feedback back to them in a tour set up within, 24 to at max 48 hours. Because I want to be known as that consistent guy, right? They can, and then being, clear in your criteria as well. You don't want to come, into your market and just say, I'm looking for a good deal. What are you looking for? What class, what age? Yeah. What area? And just doing what you say with brokers goes a long way, but it's a long game, right? It doesn't happen overnight. You don't have one conversation with them, they leave impressed, and the next day you get, the deal of the century in your inbox. And then, it also, this goes back to the payroll thing, but it falls in line with the properties we kind of settled into. We've been looking at, 100 plus, and on that front, the capital chasing after it is just tremendous. I mean, especially right now is a very weird time where rents are falling and occupancy is softening, and price, cap rates are still compressing and going the other way.
Yep.
The good news train in Austin hasn't really stopped. with 2020, despite all the bad news. There's still, record relocations coming here and Tesla and all that. So, all the stuff that makes the headlines, makes sellers a little more bullish. But, we kind of fell into that like 50 to 100 unit range, because we found one, it's at the price point, it's too expensive for most of the small guys. Right.
Yeah.
And then, too small for most of the big guys. And so while there's no competition, your competition is reduced. And so we found we could compete more in that area. And so we've kind of focused in on that. And like I said, we still look at, above that, but you're just in a whole nother ball game at that level. And you just got to be able to manage those efficiently.
Yeah, well, that's what I was just going to say. I think there's a big gap there of, you just don't have professional management in a lot of these properties that are 50 to 75 units, especially. You get a lot of mom and pop owners, and there's an opportunity to buy those properties and actually truly put in professional management, truly put in, just a whole different feel to that property and do really well. And then, as you go to exit, there's potentially you can even package some of these deals together, especially if they're close by, and sell it to some of the bigger players in the market that are looking for a little bit more of a yield. You might be able to sell it for a slight discount, but yet it's a big premium compared to what you paid for by doing that. And if it's professionally run and managed, it's a totally different ball game.
Yep. Yeah. And that was the answer to our payroll question, is how do we make this more efficient? I know this is like really making it seem simple, but it was go and buy something else in the area, right? Find another good deal in the area, which, easier said than done. But once you accomplish it and you're sharing management, now we have 3 communities, we're adding in a 4th. It's a lot easier when they're all within, 5 to 10 minutes of each other to kind of spread that around.
Yeah, absolutely. That's key. That's critical. If you can add some properties that are close by and share some of the management, that's so helpful. Getting into that magic, 100 unit kind of number or bigger really helps you cut your payroll expenses down, and get better people too. People want a full-time job. If you're really good at what you do, you want a full-time job, not a part-time job. And if you're just managing a 50, 60 unit property, you're probably not going to be full-time. Well, and if you are, well, then you as the owner are paying way too much.
Yeah. Yeah. And, I will say on the ownership and asset management side, you're going to be way more involved on a 50 to 100 unit, unless you, like you said, you really want to overload your payroll budget, because, a lot of it's going to fall on you to make sure it happens. So just be aware of that. Right.
Yep. Absolutely. Cool. I got a couple last questions and we'll wrap up here. So what's a favorite book that you can pass on to our listeners? Real estate, business,
Yeah. I keep coming back to Shoe Dog, the Phil Knight story.
I just put that on my Audible, so I haven't.
The Audible
cracked it open.
Yeah, the Audible is fantastic.
Really? Okay.
I've probably listened to that book like 5 or 6 times now, and I think part of it is it just because I transitioned to this full time about a year ago, and so it's not all roses when you transfer over, right? It's a lot of fear, a lot of doubt. And a lot of, bootstrapping. And so hearing his story about Nike and just the process they went through is just incredible. I mean, I recommend that book to anybody.
Yeah. Cool. I'm excited. Now I'm going to fast forward and get to that book right now. I had a couple of books above that, but maybe I'll put it first. Last question. What are your 3 pillars of wealth creation?
I think, 3 pillars of wealth creation. I would say consistency. I'm a big fan of, doing what you say you're going to do and just being consistent at it, because I think that's what leads to results. Accountability. I guess that's another part of doing what you say you're going to do, but, people need to be able to trust. It should be boring, how reliable you are. And then I don't know if this counts as a pillar of wealth creation, but family. I mean, I do everything because I want a better future for my family. I want time freedom so my family can, have a life that, I didn't. So.
Yeah, that's awesome. That's awesome. Good stuff. Well, Nick, I really appreciate you coming on the show, spending time with us, and just talking about your journey and some of the importance of the leadership and the KPIs. Just that consistency, like you've talked about, and accountability, all that kind of stuff. So, I really appreciate what you've brought to the show and all our listeners. How can our listeners reach out to you, learn more about what you got going on?
Yeah, of course. Well, first off, thanks for having me on. You can find me at quantumcapitalinc.com. And that's, my email as well. It's just Nick, Nick at quantumcapitalinc.com. Feel free to reach out. Email is usually the best way because it's right in front of me, but we are on, every social network as well.
Cool. Again, Nick, really appreciate it. And you have a fantastic rest of the day.
Yeah, you as well. Thanks, Todd, for having me on.
Thanks. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.